Okay, so congratulations on taking these first few steps to what could be a life-changing decision. Now, as I said, over the next few videos, I'm going to be showing you all that you need to know to get going with this very powerful and profitable trading strategy. It's going to require less screen time than you could even think possible. Now, the naked strategy is an end-of-day reversal strategy. So basically, you only need to check your charts for just a few minutes at the end of the trading day. And the other great news is that once you understand the rules of the strategy, how it all fits together, what are you basically looking for, we're going to make life a whole lot easier for you as well by offering you a free tool as well. You just hook it onto your trading platform. It does a lot of the work for you as well. So that's going to be great. More about that later on in the video series. So what is a reversal strategy? Well, as you may know, markets can be in a state of one basically of three conditions. The markets could be in a range or consolidating. Now, markets in fact are consolidating more often than they're not, so this is a consolidation range. Or they could be in a trend. Now, a trend is basically when prices are moving in one particular direction, creating higher highs and higher lows in the case of an uptrend, or indeed if it was in a downtrend, you'd be creating lower highs and lower lows as prices move back down. Now, as with most things in life, all trends come to an end at some point. The members in the room will often hear me say on the live streams that the trend is your friend until the bend at the end. Now, when trends do come to an end and reverse, the moves can be quite massive. This is known as basically counter trend. Now, the naked day trading strategy capitalizes on these trend reversals, and we use certain criteria to help us predict these turning points in the market. So what do we use to assist us in this prediction of accurately predicting these turning points? Well, the most important tool, if you like, that we use are the candlesticks, and in particular two candlestick patterns. We also use some other analysis as well in conjunction with these candlesticks. But now I just want to give you a crash course in candlesticks and the candlestick patterns that we're looking for so that we're basically on the same page. Okay, so these are the Japanese candlesticks. Apparently they were invented over 200 years ago by the Japanese rice traders. They actually show us quite a lot of information. You've got here on the left, you've got a blue candle or sometimes coloured green. That basically means it is a bullish candle. Prices are on the way up. Here you'll see a red candle. That basically is a bearish candle, means prices are on the way down. But the actual candlestick chart indeed shows a lot more information than just the direction. For example, it shows us where the market opened. Now, the fact that the market opened and then had a subsequent close higher basically depicts the colour of the candle. So here you can see where the market opened, where it closed. It's a blue candle. That basically means prices moved higher than where they opened. You've also got the high up here. That's the highest that price traded in that particular time frame, and the low down here, the lowest price that traded in that particular time frame. So you see the high, the low, the open, the close, and the colour of the candlestick depicts whether it was a bullish candle or indeed a bearish candle. 5 different bits of information from one candlestick. Same here on the red candle, the bearish candle. You've got the high up here. You've got the low down here. We know the market opened up here and then subsequently closed lower down here. Because it closed lower than where it opened, the candlestick is being coloured red. So this is a bearish candle. So when we look at these candlesticks on a chart, they start to show us a pattern of price behaviour. And we use these candlesticks and patterns to help us predict future price movements. And in particular, we're looking at two patterns. The first pattern we talk about is an engulfing pattern, basically when the last candle fully engulfs the previous candle, and we can have a bullish engulfer or indeed a bearish engulfer. And the other candlestick formation that we're looking for is a pin bar or a hammer candle. Let's discuss those in more detail now. Okay, so here are the patterns that we are specifically looking at. Over here, you've got the bullish engulfing pattern. So remember, these candles tell us exactly what's happening in a particular time period. Here you'll see this red bearish candle. This shows you the market opens here, takes a high up here, and then trades lower. Sellers take control, and it closes back down here. It's a red candle showing you bearish price action in that particular time period. Now the next candle, you'll see the market opens here. We take a low down here in that particular time period, and then the buyers come in. They take control and push the market right the way back up again. We have a high up here, and we end up closing much, much higher than where it opened. And these buyers completely engulfed the previous session's sellers. So they completely took control of the previous session. This is a bullish engulfing pattern, and this shows you that this level of support, or this level down here, there was a big wave of buyers, and the buyers took control. These are very, very powerful turning points at the bottom of a downtrend. Here we've got the bearish engulfer, same thing but in reverse. So the market opens here and we close higher up here. This is a blue bullish candle. So the buyer is in control. Now the next candle, this red candle, shows you that the sellers took control. So we open here and the sellers completely take out all the previous session's buyers, and we close lower. Hence the red candle completely engulfing the previous candle. This shows you a very, very powerful turning point at the top of an uptrend. So we're looking at bullish engulfing patterns at the bottom of downtrends and bearish engulfing patterns at the top of uptrends. Very powerful, form a big level of significance in our naked trading strategy. Now, the next pattern I want to show you really is just one single candle. These are called bearish and bullish pin bars, sometimes referred to as hammer candles or inverted hammer candles. To form a pin bar or hammer candle, you need the main body of the candle to be in the upper or the lower third of a candle. So for example, here you'll see the market opens here, closes here. This is the main body of the candle. It's in the bottom third of that entire candle. So that constitutes a pin bar or hammer candle, inverted hammer candle in this example. So you can see exactly what's happening to price. Markets open here, and then buyers come in. They take us up to this new high up here, and that's met by a wave of sellers. The sellers come in, they take control and push all those buyers out of the market, and we end up closing lower than where it opened. This is a very bearish pattern and very bearish candle at the top of uptrends. And conversely, you've got the bullish pin bar. Same thing here. Market opens here, then the sellers take control, take the market back down, hasn't closed yet. We hit this low, then the buyers come in, support is found in the market, and the buyers take this market back up, and we close above where it opened. Again, this is a very bullish candle, often seen at the bottom of downtrends. Now, when you see these patterns appear on the daily charts, they can indeed be quite powerful. But we don't just take the trade every time we see a bullish engulfer or bearish or pin bar. These have to form at specific points on the chart, at key levels of support and resistance, amongst other rules as well. We'll be discussing those later on in the video series, so make sure you tune in for that. Now, drawing support and resistance is sometimes often confused. People don't really know how to do that. I have a way of drawing support and resistance which will basically take all the guesswork away from it. And I'm going to show you that in the next video, so make sure you check out the next video that's on support and resistance straight after this one. Look forward to speaking to you then.